Hey there guys, switching things up a little bit in this video, I'll be talking to an expert about the financial system. He knows very well what the Federal Reserve is all about, so we'll be talking about what the Fed's trying to do to our economy. We'll be talking about what could be done to end the Fed, and also if the Fed does cause any sort of recession, what can you best do to protect yourself financially? Take a look. Colin Plume, president of Noble Gold. Always appreciate you giving us your expertise and your time here.
Thanks, Jordan. Yeah, no, I know it's a busy time with the holidays, and appreciate you having me on.
Absolutely. And I want to begin this conversation by getting into the economy, being that you study the markets, you're involved in that realm. And on one hand, we're hearing and seeing a lot of evidence that shows us that our economy is growing, that it's booming. We've got unemployment numbers, we have things like that. But then on the other hand, we have certain indicators and people who follow those sorts of things. They're saying that a recession might be coming up. And 2020 and beyond that, we might be looking at some turbulent times. So what do you see in studying these markets?
Yeah, I mean, I know manufacturing has slowed down considerably. Just looking at the numbers, you look at the stock market, and obviously it's close to all-time highs. So that does give people a lot of comfort when they're looking at their portfolios. But I do know that a lot of the risk managers out there, hedge fund managers, are moving away from equities. I had a report that just shows that a lot of the 1-2% of wealth in this country is nervous, and they're moving into safer investments. Some of them are even moving into cash, which is sort of surprising if you think about what the value of the dollar is. So, I think you have that comfort level with looking at the stock market, but then if you look at historical numbers, we've never seen a bull market last as long as this bull market has lasted. And so you have a lot of cautious investors that are sliding into gold and silver and more stable investments. Gold's up about 16% this year. So it has outpaced a number of the equity markets year to date. Silver, I still think, is a tremendous value. You and I talk about silver a lot. And
it's only about $17 an ounce now, right?
Absolutely. It's a bargain. And, if you look at reports from mining companies of silver, silver mining is really a byproduct of gold and other metal mining. So if the rush and demand for silver goes up, the amount of silver coming out of the ground can never keep up with it, because it's not typically the metal that they're looking for. It's just an ancillary benefit of mining for those other metals. So I think when you see that the drag, gold up 16%, you see silver hasn't moved that much yet. I think it's very optimistic that we could see a nice run in silver. I know that the U.S. Mint is releasing or starting to sell their 2020 U.S. Silver Eagles, and the demand for those has been through the roof. So I do see that we'll see a trailer effect with the silver prices probably the first quarter of next year.
And could this coincide with any potential recession? Do you think our economy is going to start slipping a bit?
Yeah, I mean, for a recession, you need two quarters of negative growth, which can happen very quickly. The Fed has QE4 in their horizon, and they're expanding the money supply to try to stop that, to try to move in a different direction. But I think everybody knows that the debt of the country is tremendous. And I don't think if you gave anybody, if I gave you $100,000 today, I don't think your first option would be to put all that money in the stock market. I think anybody that has any common sense that got that gift would look at other options as being safer. Maybe you do put some in the stock market, but I think you'd want to hedge your bet, just because we've never seen the numbers in the stock market that we see today. So there's nothing out there to justify the values of stocks, because if you look at the fundamentals and you look at the Shiller Price Index, which shows the actual fundamentals of stocks and their true value, it's much lower than what they're trading at today. So a lot of it's a function of cheap debt, and a lot of it's a function of emotion in the markets, because when people feel comfortable, they leave their accounts and they don't do anything. When they start to see things start to go down, they start to sell, and that will have a trigger effect and stock prices will drop. So as much as people think, well, the economy is good and the stock market is going to stay the same, it's not always that drives the markets. When 2008, when we had that collapse, a lot of it is people selling stocks on top of the value of stocks dropping. It's a combo effect. So if we see that sentiment in the country that, hey, maybe things are going wrong, I need to get out, stocks will continue to dive and go down in value. And obviously that's the worst time to sell, when a stock drops 15, 20%, but human nature is you want to get out of something that's falling. And so that's what a lot of people do. And it's, on the flip side, with gold where it is right now, people want to see gold hit sometimes $1,700 an ounce before they buy it, or they want to see silver hit $20 or $22 or $25 before it moves. But that's the wrong thing to do. The right thing to do is, if you see that the value is there today and it's undervalued, then now is the time to buy. So we have a lot of our savvier investors getting into the markets right now and diversifying. So you don't want to buy at the peak. That's the goal here with investing in general.
Totally. And it sounds like we're not at the peak right now. Gold is just about 1,500. And like you mentioned earlier, it's up 16, 18% just this year. Looks like it's going to continue going. And then even more so with silver, I mean, $17, $18 an ounce. What do you think that could double within just a year or two?
I mean, absolutely. I don't know in a year, but absolutely silver could double. Jordan, you talk to people, you're out there, and you know that people don't have confidence in our financial system. They don't have confidence in our currency. There's no doubt about it. I mean, if you go to your favorite restaurant today and you went there 5 years ago, how much has the price of your favorite meal gone up in that time period? That's just one of the indicators of how heavy inflation is. I mean, fruit, everything, vegetables. I mean, depending on what you're eating, what you're putting in your body, I mean, those costs are going up tremendously. And I know that you're really particular about what you eat, what you drink. I know you've seen it. You see it on a daily basis.
We all drive cars. Gasoline's going through the roof everywhere.
Gasoline, above $4 in a lot of places. I mean, everything has gone up tremendously, yet our income has not followed suit. So there has to be some kind of trigger effect eventually. And basically what ends up happening is that people take credit cards, they pull money out of their house. I was listening to a commercial about one of these, cash places, and it talked about taking money out of your house to buy gifts for the holidays. And I was like pulling my hair out, thinking like, yes, of course you want to buy gifts for the holidays, but I don't think pulling equity out of your house to buy gifts is the best allocation, because those places, the interest rates on those loans are tremendous. They're going to charge you tremendous rates on those quick, kind of turnaround loans. There's a lot of
common sense might say it's a lot better to have a roof over your head than just some extra gifts for the holidays.
Yeah, exactly. Yeah. I mean, I would just say, take a step back and realize that, like, if you have a home and keep the money in there, if you have an investment you're going to put money into, then it makes sense. But to buy something that's, just a gift, it's not the wise thing to do. And I'm hearing these ads, and if you're hearing these ads, you know what that means. The ads are working. People are taking that step. That's the scary thing about it, is they're getting into debt to cover those things, which is not smart. So I'm nervous about that. Obviously, you have the credit bubble, you have the student loan bubble, and then it'll be interesting to see what happens with real estate. But it's an unnerving time right now, and I think we'll see how the last quarter, the retail sales reports come out. See how much people are spending, how Christmas is. A lot of the retailers, the big companies, Gap and all these places, they survive on that last quarter, Christmas sale, Black Friday. So we'll see how they do. And, I think that'll be a better indicator how next year is going to be. Plus you have the election, plus you have the impeachment hearings. I mean, there is a lot of things that could screw up the economy. When Nixon resigned, there was a tremendous pullback in the stock market. So any kind of presidential shuffle, if that were to happen, that would be devastating for the market. So I think it's a good time to be cautious.
Yeah, and backing up for a quick sec, we were talking about public confidence in the economy. And one thing that a lot of people in the public are losing confidence in as well is that Federal Reserve.
Yeah,
And
absolutely.
I think people give it a few years, but I think people are generally going to be looking for an alternative currency, something that can help them end the Fed. Whether
Yeah.
we get onto a gold standard in a mass way or not, I think a lot of people are still going to be looking for something that they can get out of the Fed game with, the fiat money game.
Absolutely. Yeah, it's a manipulation. The Fed is it's run by the banks, and so they're only going to look out for their best interests, and that's sort of the scary thing about it. I mean, we've created an economy where saving money in a savings account makes no sense because you get no return. And that's because of all the debt that we've created and just keeping interest rates at these all-time lows. It's not a normal market. The free hand is not here. It's not working. We haven't allowed it to work. So, we have all these things just pumping and pumping and pumping. And, it doesn't really help the average person. This debt, keeping, the interest rates this low and having savings account pay 0.25% does not help the average person, because the average person isn't going to take on 10 different, 15 different risky investments and hopefully hit one of them. That's just not the way that we're wired. And so you have all these things happening. You have people on fixed income that, when this thing started with Social Security, it was, great idea. But now the amount, people are getting is not going to be enough to survive and pay rent and pay for food and everything they need. So something's got to shift. We have to see some kind of change. And I would, as Ron Paul says, End the Fed, his famous book and his quotes, I would love to see some kind of shift so that our money, again, was worth something. But until that time, we got to look at what real money is. Real money is gold and silver. And it's always been there. And that's really the only true currency out there, because it has a limited supply, especially gold. There's only enough gold in the world to fit in 2 Olympic-sized swimming pools, 2.5 Olympic-sized swimming pools, which, if you think about it, how much gold is held by central banks, there's really not that much gold out there to buy and sell. And that's what keeps pushing the price of gold up over time.
Yeah, you always want to, hope for the best, but prepare for the worst. And hoping for the best, that could mean that the Fed is ended and we do get back onto a gold standard and everything just continues rising. But if we're going to prepare for the worst, well, then we want to look at the situations that could happen. We could go into a recession. Of course, with the Federal Reserve being owned by the central banks, they could use that as a weapon against the president, along with the phony impeachment hearings and everything else, to try to take him down. So there's just a lot of, there's a lot that could happen. But then, like you've been saying, there's a lot of ways that we can prepare for that and give ourselves a buffer with like gold and silver, especially silver. Put a lot of money into silver now, and in a couple of years could be good.
Yeah, silver is a great investment right now, and it's affordable. And also while we're talking about it, sometimes people just need a little push, and they've been thinking about gold and silver for their IRA for a while, or maybe they have an old 401k. I do want to offer anyone that's watching this, call in, mention that you heard us on Jordan's show, and we do have a little special offer for any qualified IRA, where we will help you get more silver in your pockets. So just when you call in, mention you heard us on Jordan's show.
What's the phone number?
877-646-5347, or they can go to NOBLEGOLDinvestments.com, talk to a no pressure representative. I think they'll be pleasantly surprised. We build relationships. We know that an investment in gold and silver is a lifetime relationship, and I think you'll find a lot of great people, men and women that are working here that you'll enjoy and give you a lot of good information. And ultimately, the information is free and the conversation is free. So I definitely urge anyone to give us a call and learn about what we do.
Yeah, I always appreciate how much free information you guys have and how much good customer service you guys have too. I get a lot of messages from people that say that they were really happy with the experience with you guys. I wanted to thank you for that, Colin.
Absolutely. We work hard. The staff, I was saying to somebody that, over the holidays and Thanksgiving, I'm thankful for my family and, everything that's been happening, our health. And I'm really thankful for everyone that works here because I do think that everybody believes in what we're doing and they really put their heart and soul into helping people. And I think it shows. And I think if when people call, they'll find that we always are available. We always answer the phones, and it just shows how much love and respect we have for all of our clients, and just passion for what we're doing.
Awesome. Thanks, Colin. Take care. We'll have you on again soon.